Hi, in this video I shall share with you the operating environment of Singapore Airlines, or SIA in short. This video clip is not meant to be a recommendation to buy or sell the mentioned security or securities herein. The contents here are just the personal opinions of the speaker. First of all, let us look at the share price of the Singapore Airlines over the last 20 years. At the turn of the century, SIA share price was in the region of about $20 per share. Then after that, the share price started to drop. I do not exactly know why the share price dropped. Perhaps it was due to the dot-com burst or the recession that was taking place in US at that point in time. Not long after that, in September 2001, came the terrorist attack on the Twin Tower World Trade Centers in New York, and that hit the share price of SIA even further. In fact, its close competitor at the time, Swiss Air, was then led into bankruptcy. Although the share price of SIA was affected, it managed to survive, but still the share price went below $10, and after that it began to climb again to $15. But again, because of the US recession, the share price again dropped to below $10, and of course accelerated by the SARS that happened somewhere around 2002 to 2003. But after that, it came a period of irrational exuberance. Now, this period was the time when a lot of share prices went up. Definitely blue chips like SIA went up as well. I don't think it is due to the fundamentals of the airline. Perhaps it's just an irrational exuberance causing all the share prices of many blue chip companies to go up. And that was exactly the time when the STI hits the high of 3,800 somewhere around October 2007. But then following that came the global financial crisis, which happened in second half of 2008 to the first half of 2009. As a result of that, the share price of SIA went from $20 to all the way below $10. During the recovery, it managed to climb back to $15, but with the oil price high at the time, it went down again to $10. And for the next 10 years or so, the share price actually has been hovering around $10 before it met with the COVID-19 pandemic, which slammed the share price down significantly to below $5. Personally, I've been relatively lucky. I actually had bought some shares around here, and I managed to sell during the irrational exuberance periods just before the global financial crisis. I was waiting to buy them back, but I find that I have no opportunities to do so. As you can see in this slide here, the share price of SIA has been pretty constant even before the COVID-19 pandemic. Just have a closer look of the share price over the last 10 years. It has been range bound between $10 to $12. Unless you are really very lucky to buy at a very low point and sell at a high point. Basically, it is very difficult for any long-term player to buy and hold the stock if the share price continuously stay within close range. And of course, during the COVID-19, the share price plunged because there was a dearth of air travelers. And as a result, there wasn't really business for SIA. SIA having to maintain its fleet and cost, it has to raise rights and convertible bonds. And this caused SIA share price to plunge significantly to below $4. And right now, it is still trading below $4. Also, as you can see, the pandemic 19 is not the only threat that SIA has been facing all along. In fact, the COVID-19 helps to accelerate the whole situation. SIA share has not been actually doing well. If you look at the past 20 years or so, it has dropped actually from $20 and hovering around $10 for many years. Now, why is the SIA shares happen that way? There are actually several threats as far as SIA is concerned. First of all, it was the advent of the low-cost carriers. In the turn of the millennium, there were so many low-cost carriers that almost each country has at least one low-cost carrier. And in fact, Singapore itself has probably 2 or even 3, being the Value Air, Tiger Air, and Scoot at that time. Over the years, there were a lot of consolidation and merger between all these. And right now, for example, Value Air is no more in operation, and Tiger Air was merged with Scoot and became the subsidiary of Singapore Airlines. And the Jetstar has become the subsidiary of Qantas. There was a huge consolidation following the advent of the low-cost carriers. Then the next threat, as far as airlines are concerned, is the crude oil price. As you can see from the last 20 years chart, the crude oil price has been quite volatile. In the turn of the millennium, it went from around $30 to as high as more than $140 per barrel. This was a time of really irrational exuberance, which I mentioned earlier. And during the global financial crisis, it kind of slammed down all the way from $140 to $40. And during the recovery stage, it again went up from $40 to $100 before it slammed down again somewhere in summer 2014 from $100 all the way to around $30. And then on, it has been up from $30 to somewhere around $70. But following the COVID-19, it again slammed down, and this time it went sub-zero. That is free of charge. In fact, when it is sub-zero, it means that basically you need to pay people to take delivery of the crude oil. But then, of course, that was temporary, and it went back up again to right now around $40. So with this kind of volatility, it is very, very difficult for airline industry. They do not know whether they should peg the oil price or they should buy spot for their fuel requirements. Now, apart from low cost carriers and the oil price, there are also other threats, such as the competition from the other main carriers. Over the last 20 years, there are quite a number of developments around us. For example, the Emirates and Qatar were coming up to compete directly against SIA as one of the best airlines. And then we have the Chinese airlines as well as Cathay Pacific from the north. And then we have the Qantas, NZ, and Jetstar from the south of us. So surrounding us, there were also a lot of competition as far as SIA is concerned. Going post COVID-19, the sitting arrangement within the passenger cabin would not be the same anymore. Pre-COVID-19, the airline can pack passengers in every seats within the sitting configuration. However, post-COVID-19, the passengers can only sit with an empty seat in between. Literally, it means that there is a loss of 50% in terms of sitting arrangement. And there are other additional costs such as more cleaning, more insurance costs, and all the social distancing needs. All these are additional costs as far as airline industry is concerned. And therefore, SIA is no exception. So going forward, it means that there is a huge cost on the airline industry. And going back to the financials, now this is the cash flow of SIA for the last 6 years or so. As you can see, they were enjoying positive cash flow due to operation. However, in terms of free cash flow, they were quite negative, and this is not a good sign as far as SIA is concerned. Now, given this situation, I think the next few years will continue to be quite grave as far as SIA is concerned, because right now SIA has more debts and there are also more shares in the float. So with that, thank you very much for viewing this video. See you next time. Bye.